All right, let's take a look at the government's latest plan when it comes to Kiwisaver and how it all became a bit of a disaster.
The government has its sights on your retirement savings, it seems. It's planning to charge GST on Kiwisaver fees, bringing in an extra $225 million a year to the Treasury benches. But
$225 million per year. So what the government is trying to do is to recoup a whole bunch of money that basically they gave out for free during the pandemic. Is that what they're trying to do here?
it'll come at a cost to your retirement. Deloitte partner Alan Bulow is with us this morning to break it down. Good morning.
Good morning.
Great to have you here. Can you tell us what is changing, what the proposed change is?
Sure. Historically, Kiwisaver fees have always not been subject to GST, right back to 1986 for any form of retirement savings.
Yeah, that's what I thought, because isn't that part of the reason why the retirement fund is set up, so that it's separate to other forms of investment and you don't get charged extra tax on top of that?
Other forms of investments have been subject to a little bit of GST. In effect, 10% of the services you got for fund managers were taxable, 90% were exempt. There's been a little bit of running around and a bit of technical confusion and all sorts of things that get GST geeks like me happy in the non-Kiwisaver side, but Kiwisaver's always been really clear. What has come out with the government announcement is they want to try and tidy up some of those other bits on the non-Kiwisaver side. We don't think the way they're doing it is the right way to do it, but we see Kiwisaver as being collateral damage in their technical attempt to try and fix the thing outside of Kiwisaver.
What is this thing that they're referring to that they're trying to fix? What is this thing? They're being extremely unclear again about this thing. Like, if it's an issue, they should be able to say what the issue is instead of just saying that, oh, this thing, that thing.
They're then saying, well, we can't make that taxable and leave Kiwisaver fees non-taxed, so we're going to tax everything.
Right. So this is about consistency. They're trying to make sure it's consistent across different forms of savings or investments. What impact will this have on your average Kiwisaver who is saving for their retirement?
And this is the really interesting thing, to try and solve and get that consistency on what we see as a pretty fine technical.
Is it just me but this guy seems extremely happy talking about this GST change. Like, I have never seen anyone so happy talking about taxes in my life, but he really seems to be having the time of his life talking about taxes.
Point, and we think if they just legislated what was the current treatment, there would be no need and there'd be no additional tax that would be caught. But because of that compounding effect, in the documents that they've put out, they give some examples, and for one example, it's a decrease in your Kiwisaver balance of 20,000 by the end of it. And the really staggering number is the one that the Financial Markets Authority have put out. Looking out to 2070, the total Kiwisaver balances they're expecting would be over 100 billion less.
100 billion less. That is a huge, huge amount that's coming out from the Kiwisaver investors' pocket. 100 billion.
So Kiwis will have $100 billion less in savings.
Correct.
By 2070.
Huge amount.
Correct.
Because of you're fixing some technical glitch.
Correct. It's a sledgehammer to try and
because
fix this little technical thing.
It's a technical glitch. They're saying that people will be 100 billion less in their investments because they're fixing a technical glitch. This is ridiculous.
I don't think that's the right way to fix the technical point.
You don't think that's the right way?
And Kiwisaver is just collateral damage.
Okay. The minister has...
How can you just say that $100 billion is collateral damage? Like, what is so collateral about this? Like, $100 billion, come on.
Said that this won't come in until 2026, and so hopefully we'll be out of a cost of living crisis by then, though who knows. He's also said that the...
2026, there's no guarantees that this government will still be around by then. Just saying.
The charges will be phased in, and that the fund managers won't necessarily pass on the GST cost. Are you buying that?
I think for there we'll be guided by what the Financial Markets Authority have said when they've looked at it in the Inland Revenue documents. And they've said they think most fund managers will pass on the costs because the Financial Markets Authority is already putting pressure on the fund managers to drop their fees anyway.
There is no way that fund managers will not pass on their costs. Like, essentially, it's just raising taxes. Like, if you raise taxes, and company has an opportunity to pass on the majority of the increase in taxes onto the consumers without any, real downside, why wouldn't they do it? It's only when they would receive significant backlash from the customers, they'll start to think about it. But if it's something that has to be done, for example, if it was a Kiwisaver, you have to put money in it and it has to be locked up for a certain amount of time, why wouldn't they put the fees up?
Right, so it's going to happen, basically. So for your average, the $20,000 example you gave, is that just for your average Kiwisaver over the space of 25 years, they will have $20,000 less in there? That's a hell of a lot.
Yeah.
To a lot of people. That's
20,000.
like, if you look at the average,
It's a
what you would
significant
spend
amount
on groceries, for example, in your retirement, that's about 4 years worth of groceries.
Yeah. Yeah, and as we say, this is a technical decision. The Inland Revenue set out 4 options. One of the options was, look, there's a little bit of inconsistent treatment. It's a bit messy. And one of the options which we support is just, well, let's just accept it's a bit messy. Let's legislate to allow for the messiness and just move on.
What is messy? Like, again, extremely unclear. What is this messiness? Like, you can't just increase taxes because of technicality or messiness. None of this makes any sense at all.
And that has no cost, and that would be fine.
Why do we not pay GST on some financial services fees?
Most financial services don't have GST on it, and that's a universal thing in all GST or VAT regimes around the world. For instance, you just don't pay GST on interest.
Yes.
And it's just part of the complications and things. GST geeks have been looking at it literally for decades. There are reports for everywhere, and no one's come up with a good way to tax it. So instead, we exempt financial services from GST pretty much universally.
Right, okay.
How is GST is supposed to be goods and services tax? How is just interest a part of goods and or services? So it doesn't even make any sense. Like, how are you supposed to charge GST on interest? It actually makes no sense at all. Like, especially you get charged taxes on dividend, you get taxed on like interest that you receive from term deposit. This is essentially trying to double tax the same thing that you were getting.
Government has promised to the people no new taxes. Would you, as a tax expert, would you consider this to be a new tax?
Everybody that I've talked to that's got a Kiwisaver fund and is talking and looking at this in the last few days when we've been looking at this has told me that they consider it to be a brand new tax.
This is definitely a new tax. There's no way that you would say that this is not a new tax. Now, this reminds me of this one time where I brought my cars to the get a warrant, a fitness check, and they decided that there's some parts that needed to be replaced. So the garage went and got a whole bunch of parts, and then they charged me the labor cost of replacing the parts, and they charged me for the parts itself, and then they added up everything, labor costs plus the parts, and they charged GST on top of everything. So basically they're charging GST on the parts, whereas it would have cost GST on the parts itself again when they bought it. So it's literally GST on top of GST, which kind of sounds like what they're doing here as well.
So it's in terms of technically, is there a new tax that someone's invented? No.
There's a lot of technicalities going on here.
Hasn't been subject to tax since 1986, and saying we're going to change the legislation. It's a new change, and it's now going to be subject to tax. Sounds like a new tax.
Certainly does. Thanks very much
It's definitely
for your time
a new
this morning.
tax.
Really appreciate it. That's Deloitte partner Alan Bulow.
Of course, this has received pretty much immediate backlash from pretty much everyone out there, and let's see what the government decides to do now.
Tina tatou katoa, good evening. The government has done a major U-turn on a tax
Ooh,
that would have
major
made
U-turn.
Kiwi investors $103 billion poorer by 2070.
It introduced a plan to charge GST on all Kiwisaver provider fees, but was met with such instant backlash it abandoned the idea less than 24 hours later.
If they were going to abandon an idea less than 24 hours later, shouldn't they spend a little bit more time actually making sure that they're actually coming up with a decent idea instead of, oh, wait, let's just put out an idea. Oh, but no, we're not going to do it anymore.
And as our political reporter Amelia Wade tells us, the Revenue Minister says it's embarrassing.
About 24 hours ago, the government had a tax plan which would eat into Kiwisaver's savings.
That's crazy.
I don't think it's a good idea at all.
The plan was to tidy up some GST anomalies.
Anomalies? What anomalies? They're just coming up with these weird technical ways to describe all these things. Like, they wanted more money. It's what it is. It's not an anomaly. They wanted more money because they've been giving out a lot of money.
It's a proposal to even up GST on fees paid to Kiwisaver providers.
It would mean all providers, not just the small guys, would be subject to the standard GST rate of 15%. But IRD says the tax would take in an extra $225 million per year, and it'll likely be investors, aka savers, paying for it through higher fees. And that would affect returns. For example, in a Kiwisaver account with $100,000 in a fund charging 1%, the saver would lose more than $21,000 over 25 years.
So basically, they're telling the Kiwisaver providers to lower their fees so that they could add on further taxes onto the Kiwisaver providers, which would then probably most likely increase their fees again. So what is the point? What is the point of all of this? It makes no sense.
The plan did not go down well.
This is going to impact the well-being of retiring New Zealanders forever.
We think there are much smarter and much wiser ways to actually tidy up the bill.
What's more, the tax tweak with massive implications for Kiwi investors was introduced unannounced and buried in a gigantic tax omnibus bill.
They almost tried to get this through without us knowing about it.
You thought
That happens a lot. It happens so often. It happened in the States as well. Like, they had the relief package in the States, and it was a massive bill of hundreds of pages, and they just snuck in a whole bunch of little sections basically saying that, oh, this needs to be paid for, like office furniture and other different things, and they just snuck in a couple lines there and tried to get it all passed through along with the giant bill. This is pretty much exactly what they're trying to do here as well. Sneaky, very sneaky.
you could just sneak this through.
Not at all.
But the immediate backlash and political rally cries of
A retirement tax
meant less than 24 hours later, screech, a U-turn.
We think the furore around this was denting public confidence in Kiwisaver.
The smaller providers saying this isn't a good fix is what dropped the axe.
We were expecting some of the smaller fund managers to support this. None of them have been.
Why would small Kiwisaver providers be supporting this? This actually makes no sense at all. Like, why would they support this when they're getting taxed more? They need to pass on the costs, which means that they will increase their fees, which means that customers are less likely to use their fund management service. Why would anyone be supporting this?
We've heard very clearly from them they don't believe that's what it would achieve, and so simple, we won't change it.
They can say whatever they want. The bottom line is they can dress it up any which way they wish, but the reality is this was a tax on hard-working Kiwis.
This is embarrassing.
Yes.
Embarrassing maybe for the minister, but the flip-flop fantastic for these Kiwis.
So it's not happening?
It's a pretty risky way to check policy, isn't it?
Well, kia ora, Amelia. Just how embarrassing is this for the government?
I mean, Sam, look, no U-turn is a good
pretty
look for
embarrassing,
any
really.
government, and it really speaks to how sensitive Labor is to losing any political capital right now. The Prime Minister says the intention was to even the playing field, to make it fairer for all Kiwisaver providers, because currently the big providers are creaming it. But the plan landed terribly, in the most part, because ministers didn't get out and front foot this and sell their plan to the public. But I'm told the Prime Minister read the tea leaves pretty early this morning and told ministers to exit, with the hope that there'll at least be some credit for the swift slaughter of a bad idea.
You know, at least they canned this idea really, really quickly, but I think it's also because they really don't want to lose any political points, because there's an election coming up. You know, you don't want to receive a ton of backlashes, especially when elections are coming up. But yeah, that's it for the GST Kiwisaver saga. It's done in a day, real quick, actually. Yeah, kind of surprising, but I'll see you guys.